In the last 3 days, Tesla short sellers have lost over $2.7 billion. At this point, I think there's no arguing this. Tesla stock is in the early innings of a short squeeze. And there's a very logical reason why, and how we know this for a little bit more certainty. It's clear. I'm not a financial advisor. I'm not a financial planner. This is not a recommendation to buy, sell, trade Tesla in any form or another. But in my personal opinion, this is about to get out of hand quickly for these shorts. To put it lightly, short sellers are getting smacked in the face. Even Michael Burry just covered on his short position, losing hundreds of millions of dollars. But I think the real question is, how high do we go from here? What should you be looking forward to if you are a Tesla stock investor? Well, tomorrow's data report with retail sales is going to be important. This is going to move bonds and surely move Tesla stock. Judging on the move we're seeing here in after hours, Tesla is up another 0.5%. Following the over 6% move higher we've seen in regular trading, I would imagine tomorrow is going to be bullish yet again. We actually already have a heads up on what this data could look like tomorrow. But the question is it really bad or is it a little bad? And we're referring to retail sales. In this video, we are also going to look at the option activity for the day today. It was incredibly bullish with well over $1.5 billion bought in Tesla options. Let me tell you, the work is cut out for us here in this video. Hit that like button and subscribe to the channel if you have not done so already. It's free 99. It costs you nothing to do it. And I do think every single Tesla stock investor could benefit from watching this video. Whether you are bullish, bearish, your long-term, your short-term focus, does not matter. You will benefit from this video. Thank you to those of you guys that did that. Now let's go ahead and get started. As of November 9th, Tesla short sellers had shorted 84.27 million shares. Tesla stock on November 10th, just 3 days ago, was trading around $205 per share. At the time of recording this video, Tesla is almost $239 per share. That means if you were short on Tesla stock over the past 3 days, you have lost over $33 for every 1 share that you are short. And I was wrong. This actually amounts to a 3-day loss of $2.8 billion for Tesla short sellers. The loss is even more impressive if you were shorting Tesla stock when the stock just recently on October 31st, about 14 days ago, hit its low of $194.07. Since then, short sellers have lost $3.78 billion in about 2 weeks. These are, as I'm sure you could imagine, unsustainable losses. But the real question is, if you're short in a stock, do you have to cover or not? Does it make sense to cover on a short position? You could short a stock that is a terrible company that goes from $5 to $100. If you ultimately know the stock's going to zero, does it matter? Unless you are forced to close out of your position, unless your portfolio value drops so much, you're forced to close out of your short position. Let's be honest. Short sellers that are in Tesla are probably not in that position. Tesla's not going up 10, 20, 30x from here. That's not the argument here. The real question is, if you look out a couple of months, 6 months, 9 months, 12 months, what does the story look like for Tesla? I'll tell you right now why Tesla stock has went up so much in the past 3 days alone. The soft landing, well, it looks more likely today than it has in the past almost 2 years. So if you're not bagging on a recession for the economy, if that looks even less likely today, well, odds are Tesla stock's going to be higher than $238 over the course of the next year. Let's also be honest with ourselves. Whether you are bullish, whether you are bearish, the cybertruck, well, that's really not expected to be good for Tesla. Wall Street is expecting 27% delivery growth. The estimates are way, way low. The estimates for EPS for 2024 are down 41% in the last 12 months. It looks like Tesla's margins have started to bottom out. And Tesla is done lowering prices. Tesla's actually raising prices within the last week or so. And Tesla continues to come in with some pretty impressive weekly vehicle registration numbers out of China and Europe. The bear thesis is just not materializing. If you're a Tesla bear, unless you are living in a fictitious world, you are expecting a recession. That's my opinion. The only way Tesla does not meet 22% delivery growth. Even a shallow recession, Tesla is still likely to hit 22% delivery growth. You would have to see something like great financial crisis to see Tesla not hit 22% delivery growth. And I think that's starting to be priced in from Wall Street. And I think just the latest catalysts that we have seen that have caused Tesla stock to do very well, right? Price increases, Tesla heading into India. These things have been widely known from retail investors, right? It was no surprise Tesla was going into India. I literally titled that video, "I am not surprised." Like, it wasn't a shocker. But that just shows you the lack of good news that is priced into Tesla. You've gotten the bad news priced in, like more than enough bad news priced in. The good news, though, is not. So what is your risk to reward? Back to the original question. Tesla's not going to 10, 20, 30x, but if it's going higher from here over the next coming months, if it's not going lower, then you might be better off covering on your short position. If there is, for an example, at this point, I would argue a 20% chance we head into a recession, there's a 5% chance it's a deep recession, and there's a 75% chance we avoid a recession or have a slight recession. I think those are pretty reasonable statistics. In that scenario, there could be a 75% chance or more that Tesla actually beats estimates, that the estimates need to go higher for Tesla. That is not an optimal short to be in, especially heading into the rest of this year, as it looks like Fed policy is becoming easier as inflation is really exceeding anyone's expectations on Wall Street. Maybe not our expectations, but Wall Street's expectations. Tesla is just not the optimal short to be short in at the given moment. And also keep in mind, Tesla has now raised prices about $700 for the Model 3 and the Model Y. That doesn't sound like a lot, but when Tesla is selling hundreds of thousands of vehicles every quarter, that can be significant. I would just say that. Consider this. If Tesla sold 435,000 vehicles last quarter, times that by, call it $700, that could have added about $304 million, essentially to the net bottom line. That changes the valuation calculation for Tesla. That means if Tesla doesn't cut prices in 2024, if Tesla actually can raise prices in 2024 as your bond yields fall, as Fed funds rates come down, as I expect, Tesla might be trading a lot cheaper right now than you might actually think, or by 2024 might be trading a whole lot cheaper than it is right now. And that's a problem if you're short. So I actually think it's highly likely that you are seeing the early innings of a short squeeze for Tesla stock. I could be wrong, but that's the reason why I think so. It's just quite simple. Tesla is not a company that is a bad company. It's not a stock that shorts are hoping goes to zero. That's unrealistic. It's not going to happen. You don't have to be a financial advisor to know Tesla's not going to zero at this point. Okay, unless something drastic happened, essentially the world would have to end. Or I seen this comment a couple of weeks ago, an asteroid would have to hit Giga Shanghai, Giga Berlin, Giga Texas at the same time, or within a period of time. And good luck with that one. But again, if Tesla stock looks like it's already priced for a pretty bad situation, in which it has been for a while now in 2024, that is, well, if the stock's not going lower over the next year or maybe years, maybe the ultimate bottom is in. that's not an optimal short to be in heading into a new trading year. There is also another side to a short squeeze that does not get talked about all too often, and that is a gamma squeeze. Gamma squeezes have happened really for a long time now. This is not a new concept. It, again, just doesn't get talked about very often. It's with the options market. Take a look at the option chain expiring this Friday. So you have 30,000 contracts that expire this Friday at the 240 call. That means for every one option contract, that controls 100 shares of stock. Imagine if you're a market maker and you're providing liquidity, right, to the options market, to the stock market. If you own a call, that means you can buy shares at $240. Well, what if the stock hits $250 by this Friday? Then the market makers would have to sell you stock for $240 and buy stock for $250. They would lose a lot of money. So the way they hedge that is by buying the shares at, say, $239.90. So then they can sell them to you at $240 and still pocket a little bit. That's how market makers work. That's how they keep liquidity in our markets. Most of the trading that happens on the market is actually market makers and algorithms providing the markets with liquidity. So when you get people piling into calls, what happens as those calls start to run into the money? Well, market makers have to go out and buy more stock until you unwind your bets and the situation turns more bearish. So looking at this week's option expiration, you do have 13,536 contracts held in open interest at the 237 call. At the 240 call, you have 40,000 for open interest. At the 245 call, you do have 17,000 for open interest. And at the 250 call, you do have 33,000 for open interest. Now, 13,000 contracts times 100 representing the shares, right, that would control, that's 1.3 million contracts or shares, I should say, the market makers potentially would need to buy. So that's 1.3 million. 30,000 for open interest is another 3 million. Then you have 17,000 here. That's 1.7 million. Then you have another 33,000 at the 250. Okay, so that's 3.3 million. So that could be about 9.3 million shares that would have to be bought by the market makers, not including the 7,000 contracts here and the almost 7,000 contracts here. Call it 13,500. Call it another 1.3 million shares that would potentially need to be bought by the market makers. So if nobody else bought any more options and just held the options that they have expiring by this Friday, which is not going to happen, but I mean, people are probably going to buy more. That would be about 10.6 million shares market makers would have to buy. Now compare this to the overall short interest number of about 84 million shares sold short, and you can see just how impactful a gamma squeeze can be. Mix that with a short squeeze and you get something that is crazy. Taking a look at the option numbers for today, the interesting flow sentiment, you've seen 1,491 orders totaling $1.73 billion with a positive order value of 73%. That is very bullish for any given day on Tesla stock, and that is a lot of dollars heading into Tesla options. This market has been so painful for the shorts that Michael Burry himself just closed out of his $1.6 billion S&P 500 and NASDAQ short position for an estimated loss of 40%. So, yikes. That is not looking so good for Michael Burry and for all of the other shorts, really, on our markets. This is by far some of the lowest exposure you have seen to equities in decades. And big money is really not benefiting from that all too much. The vast majority of bought and held shares over the past 2 years have been retail investors. So congratulations to you over the past couple of days have been great. I think the next couple of weeks or next couple of months could be even better. The next biggest catalyst we have is, well, tomorrow. So you don't have to wait too long. You're going to get PPI month over month and retail sales for the month of October. Now, retail sales last month came in at 0.7%. One of the reasons we had an almost 5% GDP report. Well, for the month of October, you're expecting retail sales at negative 0.3%. This estimate comes from the low CPI report today, as well as this report yesterday from CNBC and the Retail Monitor tracking service that tracks card transactions. This data tracked 500 billion in sales, and it showed weakness in gas station sales, electronics, appliances, furniture, and home stores. October retail sales, excluding autos and gas, fell by 0.08%. So if this was the government report like we're going to get tomorrow, it would come in at negative 0.1%. The government report is actually expecting worse numbers now because of this CPI report. The estimate yesterday was the same as essentially what you've seen from this data, from this survey, and that was negative 0.1%. Now, if you are a bull in this market, pay very close attention to what I'm about to say next. You want to see a weakening economy, but not a deteriorating economy. If the economy looks like it is falling quickly off of a cliff and we're heading into a recession, do not be confused. That will not be interpreted as good news. The soft landing consists of a slightly weakened economy, but not a recession. So the estimate 0.3% negative would be pretty dang good. Let's say you get a 1% negative report. That might not be seen as all too good. So there's a fine line here between good and bad. And this goes for not just the retail sales, but any of the other data we get over the coming weeks and coming months. Now, for the second biggest data report tomorrow, PPI. Have you ever heard of CPI? I hope so. It's what caused the markets to rally today. CPI stands for Consumer Price Index. PPI stands for Producer Price Index. I like to call them Consumer Price Inflation for CPI and Producer Price Inflation for PPI. But essentially, it is a company like a Procter & Gamble or Lysol that makes products, or really any other company that makes products. Your wholesalers. What kind of inflation they are seeing. And PPI normally is a leading indicator to CPI, because normally how things work in the business world is if producers start to see their costs rise, they tend to pass on those costs to consumers. So it's not the opposite. It's not CPI rises, then PPI rises. It's usually PPI rises, then CPI rises. So we're expecting 0.1%. That would be a perfect number. That would be a fantastic number. That would be 1.2% annualized. That is exactly what the Fed wants to see. You don't want to see deflation, but you don't want to see super high levels of inflation. Now, PPI month over month last month came in at 0.5%, so 0.1% would be a very welcome number. As far as where I think Tesla stock can go from here, obviously over the long term, 2024 or so, or even subsequent years, I think Tesla's easily breaking all-time highs. I think 2024, it's highly likely by the end of the year, we are over $400 per share, my personal opinion. Here in the short term, it's a little bit more difficult to tell exactly how high we go, how many of the 84 million shares are going to be sold short, how large a potential or that are sold short could be covered on, or how large a potential gamma squeeze could be. The gap fill level as of right now is around 242. If you close above that, and that would also be closing above your 50-day moving average at $240.87, then you could start to make your way to about 250. Anything above 250, and all bets are off the table. You could go to 400 if you break above 250. If you break above this downtrending line of resistance that also somewhat connects this line here, right? If you want to just draw the parallel here, it's pretty simple to do so. Oh, well, don't do that, but you get the idea here. You somewhat draw this parallel line that meets about 250, all bets are off the table. I mean, you could go way higher after that. 300 you could easily cross 300. Until we hit 250 and break above 250, I'm going to say 250. Although in the back of my mind, I think it's very possible you could break above 250 and reach as high as 300, potentially even higher than that. There's a lot of different variables. We don't know how the data is going to come out. We don't know how Fed speakers are going to be tomorrow. There's a bunch of them as well. I highly recommend you guys have the trading calendar pulled up on your computer, on your phone, no matter, what device you're using, a tablet, doesn't matter. You can get the data and news and know when Fed speakers are speaking, all of that. We just don't know, right? We don't know how the data is going to be. We don't know how the Fed speakers are going to be. We don't know what kind of Tesla news we're going to get. So I'm going to say 250 for now. Anything above 250, again, all bets are just off the table. Let me know where you guys think Tesla stock could go down below in the comment section of this video. As well as that, hit the like button and subscribe to the channel. If you made it to the end of this video, you might as well stick around a while and watch a few other videos as well. Each and every single day, a video is posted at 4 p.m. and 9 p.m. and sometimes really late at night, just depending on if there's information I think you guys need to know or not. I'm going to go ahead and tend to the 3-year-old and the 6-year-old or 6-month-old that, making me lose my sanity over here, okay? As a single parent, this is a tough job to make these videos and keep kids alive. So we're doing our best, but nonetheless, do apologize slightly, not all the way, for them being a little bit loud in the back of the video too. I understand it's annoying, but there's not too much I can do at the same time because they are so young. Nonetheless, guys, enjoy the rest of your day. Come trade us. Come trade us. Come trade with us down below in the comment section of this video and the description of this video. We will have a link posted if you guys want to get notified every single time I make a trade and a new trade does come out. Great place to be. We made 2 trades today. Pretty optimistic on both of those. One is a target earnings play and one is a swing on PayPal. Come check it out. Come join the community and get involved with something much greater than just one individual. Thank you for watching. My name is Michael Tyler. Enjoy the rest of your day, and I will see you in the next one.